And we're joined now by Kristin Myers. She is editor-in-chief of the financial website The Balance. Thanks for being here. Let's take a look at the big picture. How big of an impact is inflation having on people who are saving for retirement? Let's focus on that.
Yeah, so inflation right now is particularly harming those that are in their retirement years because they're pretty much on a fixed income, right? And so right now, just as your correspondent was discussing, we're seeing the cost of just about everything increasing, not just eggs. We're seeing the cost of rent, utilities, other housing costs, healthcare costs. They are all on the rise. And the problem here, particularly with inflation, is that higher inflation means that the Federal Reserve, that's our central bank who is trying to fight inflation, starts to raise interest rates. And as we've seen over the last couple of days, markets are not liking when interest rates are going up. And people that are looking at their 401ks, whether they are old or young, they are definitely seeing the impact of that as the markets essentially are having sell-offs.
Yeah, and inflation and market volatility, obviously they impact different groups in different ways. What is the current situation like for current retirees? You just mentioned them, especially those with lower and fixed incomes.
Yeah, so if you are close to retirement years or you're in your retirement years and you're looking at that 401k, what you have here is a situation where you have essentially almost every asset declining. And usually the older that you get, the less risk you want to have in your investment portfolio. So you want to be reducing the amount of stocks that you might have, for example, in your 401k, and increasing the number of bonds that you are going to have in your accounts. And I think just over the last couple of days, this serves as a very good reminder for those that are either looking right at retirement or are in retirement right now and haven't made any sort of changes in their retirement accounts to really do so that they're not clobbered as much by some of these declines. The situation here is this. If you're someone who's 30 years old, you have another 30 plus years to recover from some of these losses in the markets. But that's not the case right now if you're going to be retiring in the next 6 months or a year, or if you're essentially in retirement right now.
So what is the advice you would give people who are just about to retire?
Yeah, so this is, again, a really great time to essentially mitigate some of those risks. You're going to want to start pare back some of your holdings in stocks, not because stocks aren't a great investment, but because they are a little bit more risky. And you want to start approaching or looking at things like bonds. They are less volatile. They are usually, if we're talking about treasuries, guaranteed and backed by the US government. So they are a far more safer investment. And you want to start increasing how much you're invested in some of those. And then you want to also start considering reallocating some of your portfolios. The environment that we're in right now, higher interest rates, they don't favor some of those tech stocks, those high flying, high growth stocks that we've seen do very, very well over the last couple of years. You're going to want to start looking at some of the, more boring, less sexy stocks like consumer staples and utilities. And that's definitely going to help you over the next couple of months, especially as we might see the markets going on some of these wild roller coaster rides.
And you talk about having more time to recover if you're still far away from retirement, if you're a decade or more away. People sometimes get complacent, but what should we all be focusing on if we're in that stage?
Yeah, so two things I would say. First, you also want to be checking in on your 401k, but I want to be very clear here. Don't just check it when the market is in the red. This is not the time to check in on your retirement account and panic as if the sky is falling. You want to be checking in on your retirement accounts at least every quarter, every 3 months. Look at your retirement accounts, see how they're doing. See if maybe you could be taking different advantages of some different gains. Consider reallocating or moving things around in your portfolio. And you should do that no matter what age you are in. And if you're younger, you should also consider that this is a good time to take advantage as some of these stock prices decline.
All right, Kristin, thank you. Appreciate your time today.
Thanks so much.
Thank you for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.